Oil prices have come to a standstill today following gyrations on a Friday. Other financial markets are also trading quietly today on the occasion of Martin Luther King Day in the United States. Traditionally, markets are thin due to the absence of American traders. Indeed, US-based investment funds manage the most part of the global financial capital. Meanwhile, fundamentals are setting the stage for the bullish trend of oil prices, and the US strikes against the Houthi forces in Yemen escalated the risks of a spending geopolitical conflict across the Middle East, the crucial oil-producing region. Oddly enough, oil prices closed on Friday at the level they opened the trading day. Despite high volatility, there were no radical price changes, with the exception of the initial reaction, when the price jumped above the level of $80 per barrel. The main catalyst for speculators remains the information environment. Hence, technical analysis will take a secondary role. The fundamental picture is also the main catalyst for gold. Despite the bank holiday in the United States, the metal managed to gain ground for the same reason, the clashes in the Middle East. The instrument has been extending its steady rally because investors are seeking shelter in a safe haven assets. The precious metal is commonly viewed as the most reliable asset of all available. If gold consolidates above $2,065, traders will increase long positions, thus pushing the price to the historic high. The Russian ruble again surprised traders as it strengthened to 88 against the US dollar. This happened beyond trading hours. In the case for the ruble's advance was inflation. The annual CPI unexpectedly slipped to 7.4% from a 7.5, defying the estimated acceleration to 7.7. The inflation report was released after the closing bell on a Friday, and the most important is that a slowdown in inflation could moderate the zeal of the Bank of Russia in its struggle against inflation. Perhaps the regulator could bring up the issue of monetary easing in its aggressive policy. Commonly, softening of the rhetoric is bearish for the national currency. However, this likelihood is making the opposite effect on the ruble. The Bank of Russia itself acknowledged that its anti-hawkish monetary policy is putting the domestic economy in jeopardy. So the prospects of rate cuts are welcomed by market participants as an entirely positive factor. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow news with us, and see you soon.